Did you know that nearly half of people are missing out on a crucial opportunity to grow their wealth? A recent study revealed that a staggering 45% of individuals have absolutely no investments in the stock market. This alarming statistic highlights a significant gap in financial literacy and a missed chance for individuals to secure their financial future. Investing in the stock market can seem daunting, especially for those who are new to the game. However, understanding the basic principles of investing is crucial for building long-term financial security. By grasping these fundamental concepts, anyone can overcome their financial fears and start their journey towards financial freedom. It's time to take control of your financial destiny and unlock the potential of smart investing. Whether you're starting with a small amount or a significant sum, the principles we'll discuss apply to everyone. Let's dive in and explore the key pillars of successful investing. One of the biggest hurdles for novice investors is overcoming the fear of loss. It's natural to feel apprehensive about putting your hard-earned money at risk. However, it's important to remember that investing is a long-term game. Short-term fluctuations in the market are normal and should not deter you from your investment goals. Another common challenge is a lack of knowledge about investing. Many people feel overwhelmed by the complexities of the stock market and are unsure where to begin. The good news is that there are countless resources available to educate yourself about investing, from books and articles to online courses and financial advisors. Misconceptions about investing can also hold people back. Some believe that investing is only for the wealthy, while others think it's too risky. The truth is that investing is accessible to everyone, and with the right knowledge and strategies, you can mitigate risks and achieve your financial goals. Diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes such as stocks, bonds, and real estate to reduce risk. Risk tolerance. Understand your comfort level with risk. If you're risk-averse, you might opt for more conservative investments. If you're comfortable with higher risk, you might consider growth stocks or other volatile assets. Compound interest. This is the magic of investing. Compound interest allows your money to grow exponentially over time. The earlier you start investing, the more time your money has to compound. Long-term focus. Investing is a marathon, not a sprint. Don't get caught up in short-term market fluctuations. Stay focused on your long-term goals. Economic moats. Look for companies with a competitive advantage or economic moat. These companies have a sustainable edge over their competitors, making them more likely to succeed in the long run. The most crucial aspect of successful investing is adopting a long-term mindset. Legendary investor Warren Buffett famously said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes." This philosophy emphasizes the importance of patience and discipline in investing. Don't be afraid to ride out market downturns. In fact, market corrections can present excellent buying opportunities for savvy investors. As Warren Buffett advises, be prepared with a wash tub, not teaspoons when economic downpours rain gold. This means having the financial resources and the courage to invest when others are panicking. By embracing the principles of diversification, risk tolerance, compound interest, long-term focus, and identifying companies with economic moats, you can pave the way for a secure financial future. Remember, investing is a journey, not a destination. Start today and watch your wealth grow over time. Share your investment journey and inspire others to take control of their financial well-being.